Brad Garlinghouse in Davos telling us XRP is going to have a big 2026. We'll take a look at that quote, what he has to say. But further, he gives us a novel opinion from a crypto insider about this whole Clarity Act stuff. And again, some people aren't going to like it. And I'm going to tell you the way I see this playing out, not in a dream world if I'm just king of the world writing the rules, in the real world, how this will play out. Let's break into it. The first one here, and this is quite controversial for a lot of people in crypto here. Let's listen to Brad, what he had to say.
Competition is good, and I agree very much with the idea of level playing field. Now, I also think a level playing field goes two ways, in that crypto companies should be held to standards that banks are, and banks should be held to standards that crypto companies are in order to compete. So I don't think that's a one-way street, that somehow Team Crypto gets to have, a certain pass in some way.
And people ain't going to like that statement, but here's the deal. I understand Coinbase has a specific rule, deal with Circle. Let's take that to the side. Generally, if you deposit funds onto an exchange and they're going to pay you some kind of yield, remember, the issuer, they're getting that T-bill interest, right? The exchange ain't getting nothing, so they're going to have to invest your money on your behalf here. And they'll say, oh, well, we don't have fractional reserve lending. Like, they're taking your money and they're going to make investments. What are the yield-bearing exchanges in the past that have done this? FTX, BlockFi, Celsius. They're basically shadow banks, unregulated. They're taking customer deposits. It doesn't matter if it's a dollar. It doesn't matter if it's a stable coin. It's the same idea here. And if you're going to do those kind of activities, go get yourself a banking license, get yourself FDIC insurance, and do that. And you can still pass on that interest to your customers. Banks don't have to keep all the money for themselves. If you want to do the good thing there and give your customers some yield, fine, get a banking license and do that. And then just hold back, some of the money for yourself for profit. I think that's fair. You can still change the game. Remember, centralized exchanges are not blockchain. They're not DeFi. Now, there's more to this bill as well than just the stablecoin issue. We'll get into that a bit here. But that's the deal here. A level playing field. We see this right here from Brad Garlinghouse. A level playing field is a two-way street. Just because you sell crypto on your exchange doesn't mean you can do banking activities without a license. And this isn't being pro-bank, that's just being realistic. And we've seen the only thing you can trust less than a bank is a crypto exchange, because they all do bad stuff with your money. They all blow up and cause a lot of damage. We can't have that. And again, if you want to do stuff in DeFi, where you don't have a party that's custodying your money, that's a whole different story. But when we look at banking deposits or deposits on a crypto exchange, they should be under the same regulations. And that's what Brad's saying. And again, nothing is stopping Coinbase for going out and getting a banker's license for those deposits. They can then do those types of activities. And guess what? Pass more of that on to their customers than we see with traditional banks. But they have to get FDI insurance and all of this kind of stuff. That's fine. But they need to be held to the same standards. And that's fair. And I think that's safer, of course, because again, we've seen time and time again these exchanges blow up. I'm not talking about DeFi, different things. It's not blockchain when Coinbase or any other exchange is holding on to your deposits. That's nonsense. You're just trying to skate by without having to do the licensures and the insurance. And you're doing something that has nothing to do really with cryptocurrencies at the end of the day. You're holding on to people's money and you're going to try to invest their money to earn some sort of profit here. Now, Brad Garlinghouse, this is a big one. He went on record at Davos. I think we're going to see all-time high for the crypto market in 2026. And you best believe he's talking about XRP as well there. And there are reasons. First and foremost, the Genius Act. That's important. Wait till you hear about this. But landmark legislation, unlocking institutional activity by providing guardrails. That's what we need. You're going to see a lot of adoption of this technology. It's massive. Now, we have this institutional disconnect right now. What do they mean by that? We're seeing institutional inflows, big investment capital coming in, aggressive investing, but the price is going down because retail's selling. The general public is freaking out, and this is going to pivot at some time. The reason you see those institutional flows incoming, because they know what's in front of us. It's going to happen. XRP momentum, SEC lawsuit behind us in the rear view. XRP seeing massive interest from institutions as well, which we have not had that in any other bull run. Standard Charter, they're already eyeing ahead. $8 price target for 2026. It could go much higher than that. Make no mistake here. Brad says crypto is setting into a 10-year growth opportunity. So again, this is an area you're going to want to invest in over time here. Now, someone brought up, it was actually the CEO of Coinbase, this Bitcoin standard, this idea we're going to get off of fiat currency. Brad says, look, he's not buying that. He's not buying that we're going to switch over to the Bitcoin standard. He says governments are going to bring in the tanks first. And that Ripple they're building for, complementing TradFi, being a bridge between TradFi and blockchain, making the whole system better overall. And I brought up this quote by Chris Larson. He's been saying this from the early days. What's going to happen is the adoption of this technology. It's not going to get rid of fiat currency. It's going to expand its reach of your big currencies, your dollars, your yuans, your euros, your yens. They're going to, stretch into new territories. And that's why you see the US government getting behind stablecoins now, because they get to zip dollars into all sorts of new markets over decentralized rails without any permission, without any deal making. They just zip it in there, and people are going to start using those fiat currencies in other markets. It's just another buyer for one of our biggest exports, dollars printing money. That's the reality, right? And they're going to do the same thing with investments too. That's the tokenization revolution I've been talking about. By taking these investments on chain, it's going to open up, your major investments, your S&P 500s, your major corporations, your BlackRock ETFs to 4 billion new investors that right now are locked out of investing. It's going to be a ton of capital come ripping in here. Now, when we look at, is there going to be a deal? You best believe there's going to be. Let's hear David Sachs, the crypto czar, because this is important. This is why a deal is going to get done. Because if one doesn't, both sides lose, right?
If the bill ends up dying, then there will be a form of rewards. And so I understand their point of view. But again, if there's no deal, then they're going to lose on this issue. So I think it's in their interest to work something out. At the same time, I would urge some of the crypto folks to be a little bit, to see the bigger picture. Yes, I understand that yield is philosophically important to them, but so is getting an overall market structure bill. So I think if everyone has an incentive to be reasonable here, I think, and if they do that, we'll get a bill.
But is it?
And that's the deal. If they really push this issue too far on rewards, if they don't do some carve-outs, if they don't throw a bone to the crypto industry, and no bill happens, well, they already have the genius bill and they can do that stuff. Legally today, banks lose. But crypto long-term, they need the market structure bill. Do you think as a crypto investor, realistically here, if you say no deal, you throw your hands up like Charles wants you to do, midterms are going to roll out, and you're likely going to lose at least part of the Congress here, right? Do you think once you have a Democrat Senate or House, whichever one you want, both, that you're going to get a better deal? Do you think you're going to get a better deal than you are right now? It's going to be the opposite. At some point, and there will be a comeback here where this has become a partisan issue, and there's going to be some payback because they funded the other side. And if they write those rules, it ain't going to be good. You're going to see outlawing different cryptocurrencies, tight regulations. You're going to get no protection if you mess this up, if you fumble this opportunity. First and foremost, you need to make sure, codified in law, that your major cryptocurrencies are never considered a security under any circumstance. Your Bitcoins, your Ethereums, your XRPs. That's fundamental first and foremost. You need protections for DeFi. I know right now they want you to KYC on the wallet side, on the software side. They're leaving the actual DeFi protocols alone, where they don't have to, because that would kill DeFi if they made the actual protocols do some sort of KYC. It just wouldn't work. You can't do it. It would kill the whole industry. Do I like that solution? Do I want to download the Sum app and have to KYC to do DeFi? Absolutely not here, people. And I hope that doesn't happen. If you're going to really force an issue somewhere, go after the KYC stuff. But we can work with that. We can work around it. You're not going to get better than whatever deal, and you have to get it done well before the midterms. You have to strike now. It has to happen. Understand, it does not get better than this. You have from the top to the bottom of this administration, they have massive investment in cryptocurrencies. If you punt here, you're cooked. You are so cooked for so long. This has to happen. I'm not saying don't push. I'm not saying don't pick your spots. Again, as David Sachs told us, it's to everyone's benefit here to do a deal. From the banks to the crypto industry, they need to do something. But neither side should walk away from this thing totally happy, like we got everything. That ain't going to happen, people. Further, we can do whatever we want in a decentralized fashion. You are asking to be incorporated into TradFi, so you're going to have to go by some of the TradFi rules. If you don't like it, test your luck. It ain't going to work out good for us. I can tell you that. We have to get this thing done. Protect crypto, pure crypto, first and foremost. Make sure DeFi is usable globally and that the US market can participate, and we can work around this. A deal needs to happen. That's the most important thing. Tomorrow, we're going to see Zhaodao. They do these weekly AMAs, discussions, these spaces on X, and they're fantastic. Gen X, usually Chip is there, and a whole bunch of people. We see Expector drop by, a lot of people from that community. Make sure you check it out. Also, join this revolution today. $10 payable in XRP. Use your Salmon wallet or your Bifrost wallet and really take part. This is how the investor participates in this blockchain, making the XRP ledger really the symbol for decentralization, the pinnacle for decentralization in this industry. Go ahead and sign up and tune into this tomorrow because they are really, really excellent spaces there on X. Look forward to seeing you there. A Senate Agricultural Committee just released this, as I was getting ready to record, an updated crypto market structure legislation giving the CFTC new authority to regulate digital commodities. Business meeting scheduled for January 27th at 3 p.m. for markup. Get this sucker across the finish line because all of crypto, they forget, being sued, going to be tied up for years in court. You saw what happened to Ripple. That could happen to Coinbase, Kraken, ADA, every coin. You know what that's going to do to this industry. It's going to put it on ice for half a decade. Get this sucker done now, and you're going to see fireworks go off. And remember, no one can stop us from using decentralized technology, but by incorporating in the TradFi, that is the Trojan horse that really makes liquidity easier. That's going to make this space grow and go where we want here. Patrick here is saying, no bill is better than a bad bill. What a privileged statement to be able to make. Thanks to President Trump victory and the pro-crypto administration he has assembled, they wouldn't be saying that statement just a little over a year ago when they were all in court getting sued. Get this thing done. Patrick's absolutely correct. We see here from Bitwise, Matt Hogan says, persistent crypto ETF inflows, they exhaust sellers, but it takes time. But when that happens, it's going to be off to the races. You have a bunch of OGs, they're up big, they're selling, they're cashing out, but eventually they run out of supply and then kaboom. This persistent ETF inflows is a big deal, and we saw that with gold. It took a couple years, but once it exhausted the supply, gold took off like a rocket ship. And I think we see the same thing in 2026, and that is Matt Hogan's expectation here. That 2026, we're going to see these ETF inflows, the fastest growing ETFs of all time, are going to affect the market. And when those OGs run out of coins, it's going to be all over Red Rover. And just make sure you like, subscribe, and join the Zhaodao. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.